Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, October 25th, 2022. We'll start with our economic release spotlight. I just wanted to spend a little bit of time touching on Brazil. Brazil's a country that's been on our watch list for an extended period of time, but there's some reasons that have held us out of making that purchase. So we'll talk about sort of the indicators we continue to get out of the Brazilian economy that generally are trending higher. Yesterday, we got the FGV, Consumer Confidence Report, ahead of this the October runoff election. It ticked down a little bit, but if you look at it on a 3 month average basis, 3 month moving average, it's still well north of the trailing 10-year mean. So it's still Brazilian consumer economy is still growing at an above trend state. I alluded earlier that some of the factors that have kept us out of the long side of Brazil throughout the year to date are the fact that the market pretty much agrees with our sanguine outlook. If you look at Brazil's stock market on a relative valuation basis to global equities, you look at Brazilian bond market on a relative valuation basis to global bonds, and then you look at the Brazilian real. All these assets are trading expensive relative to the trailing 3-year samples, which indicates to us that the market is assigning a premium multiple to places where the policy mix has been quite favorable. We've seen Jair Bolsonaro, for all his faults, which there seem to be many, not the least of which is sort of threatening an insurrection if he doesn't get his way in the election. But that's neither here nor there. He's done a fantastic job of improving Brazil's twin deficit situation, particularly through the lens of the sovereign budget balance as a percent of GDP. So all eyes are on the on November or October 30th runoff with him and former President Lula. Again, I mentioned there's some geopolitical consternation brewing there if Lula is deemed to be victorious. But I think the end of the day, we have to respect where we are with the global liquidity cycle downturn in terms of phase three being tighter for longer and what that ultimately means for emerging market assets, the strength of the US dollar. Obviously, Brazil has been a safe haven within the context of EM investing, but certainly not a great place to be absolute, which is why I think we've done a good job of holding off in terms of adding that risk throughout the year to date. Just kind of getting into what my longboard dashboard is signaling on Brazil really quickly here before I get into the global macro portion of the program. So EWZ, that's the ticker for Brazil there. Where are we at here? Let me get my chart view. I like the chart view better. I'm a chartist. I'm really good at charts. Somebody subscribed the other day to email me. Do you look at charts before you put on positions in the portfolio? I'm like, no, I was obviously joking. But anyway, looking at EWZ, that's the iShares Brazil ETF. This is this cap-weighted index. It's correcting a little bit, not quite towards the lower boundary of the range there. It's got bullish medium-term and short-term price momentum in longbow. It's technically still bearish from the perspective of our volatility-adjusted momentum signals, which is a different calculation, different durations, etc. So it's not necessarily all the ducks are not lined up, which is in a raging cross-asset bear market, when the ducks don't line up, you don't have to do anything. Again, I spend most of my time consulting with institutional investors, either via email or in meetings, and these people have to do stuff. They have to make capital allocation decisions on a regular basis. You, Mr. or Mrs. Retail Investor or person retail investor, you can take your ball and go home and watch popcorn. Just survive to the next bull market. Stop trying to trade every wiggle in the market, because I guarantee you the game is only going to get harder from here. We got legions of data that show in sequence and, more importantly, respect the x-axis of bear markets. And what we find is that they tend to accelerate to the downside towards the end of the movie. And so one of these times, people are going to be caught playing the positioning game, and they're going to get absolutely ran over and lose a lot of their hard-earned nest, their hard-earned wealth and their hard-earned nest egg, because again, they're spending too much time on FinTwit, thinking that they're the next Paul Tudor Jones. You are not the next Paul Tudor Jones. I am not the next Paul Tudor Jones. I'm just a guy who wakes up early, is reasonably smart, and works my ass off every day for Team 42. So anyway, getting to global macro. Where we at here? So the US dollar, that is still bullish in the middle of the range there, not much to signal. Gold still bearish in the middle of the range. 10-year, that's still bullish. We talked about how that's creeping towards the upper boundary of the range there. Let me just check and give it a look at the range and see if the range is actually expanding to the upside, which it is. That is not good. That tells you, and again, we've had the call that, look, we're going to see persistently higher than 4% 10-year U.S. Nominal interest rates in the U.S. And half of that call, which we have yet to achieve, is that we're actually going to see persistently higher than 2% real interest rates before this movie is all said and done. And in fact, we got a confirmation from Treasury Secretary Yellen yesterday in that meeting she had. I forget the name of the conference or whatever, but she was effectively saying, like, look, Yeah, prices are going down, and we're aware that there have been liquidity issues in the past, namely citing COVID, 2019, et cetera. But things are fine. U.S. balance sheets are fine. Financial sector leverage is low. Consumer and corporate balance sheets are as good as they've been in a really long time. She basically was singing the praises. She sounded like Darius Dale 42 macro in terms of some of the fundamental dynamics that we're identifying in the U.S. economy that give us confidence that inflation is going to remain resilient over the medium term. It didn't sound like we're going to get treasury buybacks or anything anytime soon. So, from our perspective, the widening of the upper boundary of the trading range here in Longbow, right here to 4.37%, makes a lot of sense in that context. Getting to the S&P 500, that is bearish, getting towards the upper boundary of the range. Although with obviously the range sloping upward. You don't want to be in a hurry to reestablish shorts in the context of an upwardly sloping upper boundary of the range. You got VIX, yeah, and part of the reason I said that is because VIX is not quite at the lower boundary of its range here. Nasdaq, same situation with respect to the S&P, although the range there in terms of the slope is not as aggressive to the upside. So maybe if you are establishing shorts, you definitely want to be focusing on that particular segment of the market. Russell, that's still bearish, getting towards the upper boundary of the range. Bitcoin, Ethereum, those are both bearish towards the upper boundary of the range. Shanghai Composite, that's bearish towards the lower boundary of the range. WTI, bearish in the middle of the range. Ag, same thing, bearish in the middle of the range. And then industrial metals getting towards the lower boundary of the range. That is also still bearish. And then lastly, finishing with my global macro dashboard, we got about 300 ETFs here, all sort of representing one individual factor exposure across global macro, across these different sectors. So we got commodities, DM, EM, fixed income, FX, US, and vol. And I dump them all here in global macro. And the reason I do that is so I can sort it by the odds to help you sort of identify which are the most overbought and oversold today, so that you today can establish trades today to make some money today over the next few weeks. Obviously, not everything we signal here is going to make money, so disclaimers there, et cetera, et cetera. But what this system is designed to do is take a lot of institutional data from the Bloomberg terminal and actually put math around it and spit it back at you. This is not trading view. This is not you playing around with trading view, trying to invent technical indicators that look good until they run out of sample back tests and they no longer look good. This is tried and true data that is being used to run a very large hedge fund out on the West Coast. So I'm very confident in these signals when I give them to you. I wouldn't put some in front of you if I didn't trust it myself. So with that, Ethereum being the most over bought thing, or at least the ETF, that's the most overbought signal in my dashboard today. So Ethereum bearish and overbought. It's actually overbought in the 42 macro probable ranges as well. So I trust that signal there. And then scrolling down to the end of the long rainbow, what's the most bearish here? Chinese financials, Chinese energy, Hong Kong, Chinese small caps, KBA, that's China A shares, and then China consumer. So it's basically a who's who of short China. So the market is no likey this Xi's grab of power. Now his appointees are in control of all the largest institutions in China. Xi's got full control of the military, full control of the domestic economy, and I want to say there's one other kind of main thing that he's in control of: military, domestic economy, and I think he's like the party secretary. So like all three main kind of things, main sort of institutions that the sort of premier can hold there. He now has it, so he has got a lot of power. The only person I can think of in the world with this much power, both domestically and abroad, is a guy by the name of Vladimir Putin, who, by the way, Xi has really shown his willingness to cozy up with in recent months. So this concept of a geopolitical sort of tear down, if you will, of the kind of disinflationary globalization phase that we experienced for really most of my life, it's over. And I think the market is repudiating the fact that it's over here in terms of Chinese equities being deeply oversold and bearish from both the short term and medium term momentum basis. So with that, Darius Dale presenting our macro minute for Tuesday, October 25th, 2022. Best of luck out there. We'll catch you back here tomorrow. Cheers.